All right, everybody. Welcome back to the More Doors podcast. Today is episode 46. We are super excited to have our guest, Jason Yarusi from Yarusi Holdings on the show as our guest today. We're going to be right back with more from Jason and my amazing partner, Nick Good, right after this. All right, everybody, welcome back to the show. It is an amazing late June day, week before July 4th. What's going on, homie? What are you up to?
Just trying to stay cool, man. I'm tired of this heat, bro.
It's like 4 days.
That's how tired I am of this already because I know what's coming. This is just the start of the cooking. And, I'm going to tell you right now, I'm going to put it out there. My goal in the next 2 years is to be able to spend the somewhere up north that I can wear, that all day I have to wear long sleeves because it's just chilly enough. It's warm that I can wear shorts, but just chilly enough that I want to wear long sleeves.
Like Banff? You want to go to Banff?
Yeah, I've never been.
Me neither.
So let's go.
I've heard of it. I don't even know where it is on a map.
Canada.
It is, right?
Yeah. Yeah. So that is a goal of mine because I'm tired of this. I'm tired of this already. 4 days in.
Dude, come on.
But I've been here. I've lived in this. Like, you're still new to this.
It's a decade.
From you're the Yankee still.
I am.
Yep.
Speaking of the Yankees, they are just falling down against the Mets. Terrible.
Yeah, I don't pay attention to that.
I'm sorry to hear that.
Yeah. We have another Yankee on the show today.
Are you trying to be a Cowboys fan?
I am a bandwagon fan. I only support winners.
You finally admitted it.
Oh, I will always admit it. I will support whoever is winning because I just like to be associated with winners.
You do.
Yeah.
You do. I don't know what I'm doing here if that's the case.
Well, you're a winner.
You ran out of smart people.
You're a winner in my book. So why don't you do this? We have Jason Yarusi, our guest on today, but you do a really good job, Matt. You do a really good job of introducing our sponsors.
Thank you.
Yeah.
You're just showering me with compliments today.
That's because you're a winner.
All right. Well, let's give a nod to our sponsors before we jump in with our guest. First and foremost, Deep Blue Capital, the brainchild of me and Nick and Brian, who is not here today for a change. I think this is the first show that Nick and I are doing together. So it's like monumental in many ways. But Deep Blue Capital, go check us out, deepbluere.com. We've been doing a lot of work on content. Check out the website updates, check out the blog, check out the podcast, check out the shorts, all the things. We have a lot more content coming out. We've also officially closed on our latest acquisition in Garland. I'm not sure if we shouted that out on the show yet, but very exciting. We're getting into a rhythm already, and we're starting to take a lot of exciting steps with our storage, our venture into storage. We closed our first storage opportunity about 2 months ago. So lots of things going on here, and we have a very bright outlook for the second half of this year, despite what you're hearing in the news. So we're here to buy right, and we're here to deliver returns for our investors, deepbluere.com. And then when you're done with that, go back into your browser and type in torestudios.com, T-O-R-E studios.com, where you yourself can go find the Wizard of Oz, a.k.a. Jesse Showalter, the man behind the curtain that can come up with an amazing podcast and a lot of great online content for you. Go check out torestudios.com. After you do those two things, you can tune back in here and listen to my boy Nick Good introduce our guest.
Absolutely. So we got Jason Yarusi on. I did it right, Jason.
The first time.
You are the first guest that I have not butchered their last name. So, that is an amazing accomplishment.
We should just fold up the show and go home now.
We should. And then while you're doing that, leave us a 5-star review on Spotify. Go hit that subscribe button on YouTube. And that way you make fun of me for how I butcher everyone else's last name. But Jason, I'm looking at your bio, man. And it's a lot. Since 2017, I see here, private fund manager overseeing $285 million worth of multifamily real estate at Yarusi Holdings. And since 2017, you've acquired 2,700 doors. And beyond that, you make us all look ashamed. Both Matt and I are pretty healthy. We focus on our fitness, but you're taking that to the next level because you're ultra runner, fitness enthusiast, and then you host the Multifamily Live podcast and lead the 7-figure monthly mastermind. So Jason, other than that, tell us that is a great bio that people read. But let's get to I want to know the real Jason. Where are you from? Give us that 60,000 foot overview.
Yeah, so good to be here. And you did get my name 3 times right? So you were
Right.
telling me you're going to get it wrong. And so you set yourself up for massive success there. So I appreciate that. So I'm born and raised in New Jersey, lived in New York City for, a little over a decade. So when I left high school, right, went to college, really just didn't have much drive or desire, right? Had some losses in my, my formative years, lost a couple friends and lost a girlfriend. So I just wasn't really motivated. Went to college, ended up picking a major based on another girlfriend's mom who said, "Hey, you're good with numbers. Why don't you do business?" So I was really making very fine-tuned choices. Left college, not wanting to go into finance, which was where I got my degree, and moved into New York City and started being a bartender. So that really just one step of the other, just doing things as they come. Did that for a number of years, just was not really, it just wasn't happy, wasn't fulfilled. Everything was just something of it was everybody else's fault. My upbringing, my schooling, my parents, the news, you're just blaming everything for why I wasn't really out there being successful in some light. Because at the same time, I had a bunch of friends, of course, who went to college and were out there, working full-time jobs, working for the Big Four, working in some finance capacity, or, fill in the blank, right? They were doing something with the moment seemed a purpose. Well, one night I was leaving the bar. It was probably 3 a.m. and just mad at the world. Got on my bike, rode across Manhattan and turns, basically rode across from 12th Avenue all the way to 2nd Avenue and made a right, started going down that avenue, and out of nowhere, a light came up and got hit by a car and thrown into the air. So get up, come to a couple seconds later, all busted up, broken arm, the pin in my wrist later, stitches I had to get everywhere, just all bloody, and get pulled out of the street, taken to the hospital. All I could think was like, man, I need to get back to work because I need to make rent. And I had this moment of pause where I was like, hold on. You just said how much you despise everything you're doing. All you're doing is just how you hate where you're at. And now this happens. You get hit by a car, and all you can think about is how you can get back to that thing that you hate. So I had that just moment of reflection. I was like, okay, you're thinking crazy. So I was like, listen, okay, if I'm going to continue to make stupid decisions and get stupid results, I can't be mad at anybody but myself. Or I can try something different, go out there and maybe, put more effort into where I'm going in some capacity and see what happens. But at least I would try. And, it wasn't like magical, like the next day I started to change, but I started to make small changes, get up earlier, start having a plan to work out regularly, stop staying up late, stop drinking the night after work, right? Just these little things that started to bubble and started to create some kind of consistency into a positive trajectory of momentum. Lo and behold, in a year or so, I had opened up a bar restaurant in New York City, opened and sold a brewery in New York City. And then in 2010, Hurricane Sandy basically decimated the East Coast. And I ended up moving to New Jersey to help my dad with his small construction business. He had a business that basically lifts and moves houses. So he would just, take the house off its foundation and either raise it higher or just move it somewhere on the property or maybe fix the foundation. Just very odd business that he would do like 10 projects, 12 projects a year because it was just like not really a high demand business. Well, all of the flooding that came from that hurricane made his business explode. So overnight he would have, 3-4 calls a month to 1,000 calls a day. It was just crazy how many calls were coming in the door. So my girlfriend at the time, my little brother who was working for me, and myself, we moved to New Jersey and helped dad ramp that business up from a couple jobs to 250 so jobs a year. Did that for a couple of years before it just was that I was just on a pace where it was just go, where I was very transactional. The business was very unique, right? It was very difficult. You couldn't really sub it out because of the complexity of it and just the risk nature of it. So you had to be there for every step of the process. And so I'd come from the bar world where I had to be very transactional, serve a drink to get a tip, to now a business where I had to show up for, if there was 25 hours in a day, I could do and use 25 hours in a day. So my wife and I, is my girlfriend, now my wife, we started to really just look at our life and say like, okay, what are we going to do just to get back control of our time? And the word that kept popping up was real estate, right? But, as you know, real estate could be 100 things. You could just, you could do tax liens, you could do Airbnbs, you could do assisted living, you could do, flipping, or you could do rentals. Well, at the moment, we went into very complicated flips. and we started doing them. And it went, pretty good. Like, it was going fine, but the goal to get back control of our life was fleeting away, because we were still doing a construction business. And now we're doing these very intensive flips where we were basically running every piece of the project. So it was good, but it wasn't really getting us the desired result. So as we looked forward to, like, what could we do next? We came upon someone who was buying out-of-state rentals. And that was that moment of pause where we started seeing that model and replicating that model to buy a couple 2 and 3 families. And, lo and behold, it pulled us out of the day-to-day, because, 1,000 miles away, I couldn't be there running to Home Depot, meeting tenants and all of the in-betweens. We had to put together a system, put together teams. And we did that. It worked fine. But again, it just wasn't scalable. So, listen to a podcast like this. We came upon someone who was buying apartment communities. And that was that moment where it all came together, because I just didn't even know that the opportunity to do something of this fashion existed, just because it had never been in front of us. But I got the mentality of just like why a small 3 or 4 unit to a large building is pretty much the same process, where you get more economies of scale just based on the businesses we had done prior. So we sold off the little properties, went all in 2015-ish, 16, into just really dedicating ourselves to large apartment investing. And then in 2017, we ended up buying a 94 unit. That was in Louisville, Kentucky. And since then, we've done, a little over 30 transactions, give or take. We're a little over 300 million in real estate, about 3,000 units, mainly down here in the Southeast. A lot really targeted about where I am in Nashville. We moved here in 2020, but that pretty much brings you full circle into today.
Well, I mean, it's a lot, and
there's a lot to unpack there.
There is.
Yeah. Well, I just gave you 19 seconds to give you 2 decades or something like that. So
love it. No,
yeah.
and I appreciate that, and I think a lot of us. I mean, I know I could speak for Brian and myself. We have those light bulb moments of either it's going to click or not, and getting. Probably the best thing, you would agree, probably the best thing that happened to you was getting in that bike accident, right? Getting, getting hurt there, and then taking that to the next step of saying, why am I going to, stick to this? And you start changing one little step at a time, right? And it didn't happen overnight. And you were able to start, like you said, you got, better health. And then ultimately, you went that entrepreneur route, as in 2017, when you went purchasing your first 94 unit, how much was that asset at that time?
2.3. Where did we finish? $2.35 million.
$2.35 million. How were you feeling at that versus everything else? Because, I know a lot of people that want to get in this, but there's, when they start looking at numbers like that, fear holds them back from taking that leap. Can you walk me through that mindset of that?
Yeah, what we did that was very helpful is I had someone at the time who was like, listen, don't just go find a project and then just hope, right? Put together your team, right? Put together all the people that externally are going to help you, right? So get the right property manager, get the right brokers, right? And just tell them exactly what you're looking for, right? So you get your avatar of what you're looking for. So we were looking for 75 to 150 units, or it was 75 to 100 units, BC assets built between 1970 to 2000. That was in the South and South Central submarket of Louisville, Kentucky. That was anywhere between like $3 and $7 million. So that was what we were telling people. And at the same time, we built out a one-pager that was basically just what we were going to find. And we said, oh, and this is how the returns work. This is how it's structured. And we started going to our friends and family just to educate them, because, we're new to this space. We have our track record from before, but most of them, they're either, invested into just, stocks, bonds, mutual funds, just this standard MO, right? So to give them the education of why we were doing this, why we like the space, how they can benefit from all these different pieces, from, the cash flow, the appreciation, the depreciation, the tax benefits, debt pay down, and how it functions, where they are simply going to be in a passive environment and still get the benefits of real estate without really having to put in the lion's share of the funds. It gave them the opportunity to, before we found the deal, and I put pressure on them that we need the money, it gave them the opportunity to go and really understand the process to see if potentially it might work as an investing solution for them. So we would do that and go out and talk to them. And then at the end of it, be like, does this sound like something that could be good for you? And if it was a more of a positive communication, yes. Well, how much? Were you thinking about 25,000, 50,000? And they would give us a number, say it was 50,000. And then we would continue that, right, all the way through until we had the confidence that, I think at the time we had a little over $1 million of people who would be ready when we found the opportunity. So when we went and actually found the thing that we said we were going to look for, right? We said, hey, we're going to find this thing. And now we had to raise, I think it was like $800,000. Well, we were able to go back to that group that we had already prepped, and we raised it in a day because we'd already done the pre-work. So it was good on the raise side, but it also gave us confidence when we were putting out, if I was putting out a letter of intent to someone, and the letter of intent was $3 million or so, well, I felt confident I could raise that money because I already had those conversations. So it wasn't a guess that like, oh, I'll put this letter out for, $2 million. I hope I can find the money when I do. So it put me more in a powerful position because I was coming from a spot of being able to make an offer to someone, while at the same time having a confidence that I had at least built a network around me that would be interested when I found the right opportunity.
See, I love that. So we talked a number of times about kind of digging the well before you're thirsty, right? So I think a lot of people who are interested in investing in real estate, and specifically larger scale real estate like apartments, get stuck on the capital raising piece. And you mentioned that you were doing flips before you went into buying apartments. So without necessarily an apartment purchasing history, you had real estate success history, but like some people would use that as a limiting belief as to why they can't go talk to people about investing in opportunities. How did you create your talk track, and how did you overcome those types of limiting beliefs when you turned into a capital raiser?
Well, yeah, you just got to start from somewhere. We always want to expect, like, we're never going to come in like, when I started my podcast, we started podcasts years ago. It was like the first ones were the dark days where I could say, it's got to be perfect and never get started. Or, like, I want to ride a bike. Well, I need to be proficient at riding a bike. So I never, I'm a little kid and I never have training wheels. Well, the same part goes here. It's like, you only have your past experiences to build on. So for me, we had done the construction business. They knew we had ramped up this. I had, sold, a brewery before. I'd started a brewery. At each part, I had to start something new. So at this part, the best thing I did is I just surrounded myself with people, right? So it was basically my wife and I who ran this syndication and put it all together. But I had made connections, right? You talk about Jake and Gino, they have a community. They made connections that as I was going through this process, it's not the big things like, oh, I need to, go out there and learn how to underwrite to be able to find this opportunity that I can make this, offer. It's the little in between, like, oh, there's something for like the SEC that has to be done. Like these little questions that come up. I had people around me that instead of me having to go out there and fish wildly on Google, I could just go make a call and be like, hey, so this came up, what do I do? And within 20 seconds, I'm back on the path because I have someone on my side that I could make a quick call to, right? So that's really valuable in the process, is that the more you surround yourself with people that could help you along the path, the easier it is to get there. Because typically we want to either be perfect, which we won't, or we want to have all the answers, which there's never all the answers, before we get started. The one thing you do is you take the first step, and the first step unravels all of the questions you need to be asking to get to the next step. And it's usually not the answers that you need, it's the questions you need. Like I'm trying to do this, but I don't know the right question to ask. So you're not going to get the right answer. So you have to start the process, right? And that doesn't mean like, if you go to explore buying apartment communities, that doesn't mean you're going to have, it's a competitive world. You're not going to have an apartment community under contract tomorrow, but you have to take a step to understand, like, what's the next step of this process I need to do to take the next step, right? So I maybe need to figure out, is my market a viable market for me to invest in? It is. Okay, great. Am I going to invest all over this market? Am I going to invest in just a part of this market? I'm just going to invest in part of this market. Like, what's the drivers there? Like, what's the employment drivers? Like, what's the population growth? Like, what's the school basis, right? And those are the things that you can start using to build confidence as you go. But usually, like, we think like we're like jumping off a 10-story building when we're committing to something. We're just stepping off a curb. But you have to step off curb. You got to do something, or typically you're just not going to get the results.
Yep. I love that. So let me just ask one other question here. When you were looking to leave New Jersey, how did you land on Nashville? Right. I mean, probably either you were reading tea cards or tea leaves and we need to spend some more time together after the show, or you got really, really lucky, because at least from a multifamily perspective, Nashville has been a fantastic area to invest in.
So, my wife's from Hawaii. So full circle, like, how do I get a Hawaiian girl to New Jersey and then get her to Tennessee, right? So lo and behold, right, we were looking, it was right in the middle of COVID, right? Before that, we had talked like, in a couple of years, I was thinking about move somewhere. And so that just fat tracked it because we had a couple little kids and, they were just like they couldn't even go to school. They were like they're like 4 years old and they're on like 11-minute Zoom calls and take a 3-minute break and a 14-minute Zoom calls. Like, this is ridiculous. So we're like, okay, maybe it's time to go look and explore other ways to move. So we thought about putting our house in the market. We did, and literally the house went under contract in 3 days over asking. So we're like, okay, this fast tracks our move. So we were thinking about Denver, we were thinking about Phoenix, and we were thinking about Nashville. And for some reason, Peely, my wife and I, we had just been to Denver a lot for like a lot of engagements, and we were just over it for a moment. So we were like, okay, not Denver. Phoenix, we had some friends there, and we went there, and we like to get the kids outside a lot, and it was just too hot. It was just desert. We were like, okay, probably not Denver. And then lo and behold, we had just thought about, we have some friends in Nashville, and we just had thought about, well, why not Nashville? And that was really the impetus for our move, was that, great, let's, go and look to see if we want to explore Nashville. And we picked a spot that was right between, I had friends who were a little bit north in Mount Juliet and a little bit west in Spring Hill. So we picked Murfreesboro, which we had just acquired a property in, to go down there with the thought of, Peely had never even been to Tennessee. It was just like, let's move there. Like, what's the worst that happens? We move here and we just don't like it and we move somewhere else. And so that was the thought, because the only advantage to go to Phoenix or Denver was that it was closer to Hawaii, but it's not like you go there and get in a car and drive to Hawaii. You still have to get a flight, right? So we're like, okay, so we'll go to Nashville, and we moved down here. It's been fantastic. And plus, all of our investments were down here. And so it was, New Jersey, we were 1,000 miles away. If we went to Denver, we'd be 1,000 miles the other way. So it wasn't really, you don't have to be in your market, but it was a better choice just with the dynamics to be closer to where we were investing.
I love that.
Oh, that's great. And I know a lot of people that during COVID moved to Nashville. So that was definitely one of the hot areas to move. Jason, so as I'm picking up on, after, you got really intentional, and then in 2017, when you guys acquired your first apartment, but you started doing the legwork beforehand. It seems like you're very strategic and methodical in everything you're doing. So you start Yarusi Holdings. Kind of walk me through what was at the very beginning. What was the vision that you had for Yarusi Holdings, and then has any of that changed, or how's it adapted? Post COVID, and now with the higher interest rates and inflation.
Yeah, I mean, honestly, the three core principles, vision, value, versatility, right? And so we wanted to just have a vision of where we want to go, right? And both for us, for our investors, right? And with that, offer value, right? And then be versatile to what happens in the market, right? Because we've gone now 2017, right? It's at the time, people, it just was that it wasn't a lot happened in space. It wasn't a ton of energy. And then it very much ramped up. And then you walk into COVID when you think everything's going to fall over, and then that explodes into something where you have just a ton of price escalation, right? And then very competitive loans, a lot of money into the market. Now we've transitioned to a very high interest rate environment for the time, right? Not compared to just, years ago, but for the time, very high interest rate environment. And that's really sunk valuations, right? And made it a very difficult market to operate in. So at each point, it's that you have to be versatile to what's happening, but still there is opportunities at any point. Because if you were, thinking in COVID, you're like, man, the price is too high for me. I'm just going to wait until the price dips. Well, that sounds great. It's like, let me buy low in the stock market and sell high, right? You never do, because it's fear and greed. So at a point, you're waiting for the market to drop. Well, now it's dropped, and you're like, oh, I'm going to wait for it to bottom out, right? And I can't get a loan. So there's always something that's pushing and pulling on you taking action. But if you can find your model, right? So define things that cash flow, that have, long-term debt, that have reserves, right? There's a model there that you can use consistently. Now, are you going to adapt in some way? Yes, but you're not going to fall off, right? Maybe you're going to take, a side road to the highway that you're using right now for the meantime, but you're still going to get back in the highway as you go. So for us, we just kept to the plan. Like we don't, we're in 7 states right now, but we're pretty much in 7 cities, right? I'm not like in, Nashville. I'm literally Nashville, South Nashville to Murfreesboro, right there. That's it. I am not in Chattanooga, not Knoxville, Clarksville. We're just there. So we pick very designated areas we want to be in, and we stay that message. So it makes it easy for me to know what I'm looking for, but also easy for me to say no. Because I remember, like, we brought that first one, and like random brokers called me from I don't know, some I forget what guy called me. It was like Illinois. I was like, and I was literally on the phone. I was like, why are you calling me? And because we'd only done that one deal, and out of nowhere, getting these random calls, and that was my exploratory call. So why are you calling me? He's like, oh, we saw you close the deal. So like, maybe you want to do this deal in like Illinois. I was like, no, I don't. But thanks for calling me. But it just opened up, like you get all these shiny objects that it always looks like over the hill is like the grass is greener kind of effect. And when you have that, you ultimately never can find what you're looking for. It's like going to a car dealer and be like, I want to buy a car. And they're like, well, what kind of car? You're like, any kind of car. Then how do you actually know what you're going to buy? Because you're just kind of guessing out there. It's the same thing with apartment communities and markets, is that, today you're looking in Albuquerque. Tomorrow you're looking in, Des Moines. The next day you're looking in Point Pleasant, New Jersey, right? But you're nowhere because you don't know any of those markets. So you just don't know what actually could be a good opportunity.
As your buy box grown or changed, because you said in the beginning it was C and B class properties, 75 to 100 units. Have you kind of added to that, or have you kind of taken away what you guys don't want to invest in?
Yeah, 95% today is still the same. We've got a office building in Columbia, South Carolina. It's basically 5 buildings with 7 tenants, very high demand tenants. So very easy building. We have storage units that are right here in town, 228 units, and then we have 2 development sites, a 13 unit and a 288 unit here, and those are the only ones. But those, I knew, construction experience. I knew all the other pieces. I knew I did not want to do that 1,000 miles away. So when we got here, it just gave us the opportunity to do that in our backyard, because just the touch point for that is much more highly intensive for me than me being out of market, right? Especially, where you're working with just various permanent offices and all just the other government factions that come into development. But beyond that, no, it's basically just garden style apartment buildings. It's our same run route of just, here's our model, and then let's just replicate this model and rinse and repeat.
Nice. So you mentioned that you're in 7 cities outside of, Nashville. Where else do you have assets?
So we have Little Rock, Cleveland, Baltimore, but we're selling that. Greenville, North Carolina, Columbia, South Carolina, Atlanta, Georgia, and Nashville. I think I just hit them all.
Interesting. What can you tell us about the Ohio market or Cleveland?
So the Ohio market came from just a referral, and this is it's a 29 unit there. It was a brand new building that the owner, his wife got sick, and he needed to go take care of her, and so he wanted to sell anything that he had partnered with because it was very highly intensive. So he had just built it in 2021, had a tax abatement for 15 years, and so it was just opportunistic to the market there, where we're able to walk into this at just a very desirable basis, brand new units, right? They were actually. He had like a micro sense of how he was trying to treat this just to the medical field there. So we were able to go in there, just put the right team in place. And honestly, the building has just been crushing it. It's one of those where there's just, it's like not much to see here kind of properties where it just does its thing and just cash flows.
I've heard about Cleveland and I think 1 or 2 other markets in Ohio that, they haven't really seen the volatility on cap rates, and cash flow has remained fairly consistent over the course of the last 18 months. Is that accurate based on your operational experience there?
Yeah, I was surprised by how much action is happening in that market. There's a lot of action, there's a lot of building, there's a lot of development, and the city itself is very pro development, right? So we got this 15-year tax abatement because this was something that's tiered to developers, right? So they're bringing a lot of energy to that market, because the same thing, they want to revamp the market, right? Most of the things there, much older product, as you see in these, a lot of these darts where it got very hit, in 2007. So a lot of these buildings that, they're 1900s or 1910 construction. So they're trying to get a lot of growth and energy into that market. And with that said, it's kept people and developers moving, so it kept price points active. However, we haven't really looked to sell much right now. Like that building has I think, what do we have? We have a credit union loan on that. It's a 5-year loan. It's an amortizing loan, so we're just paying down the debt. So, we probably have a runway to see maybe late 2025, maybe 2026 before we might even explore selling it.
Nice.
And you mentioned, putting your kind of, your people in place. Let's, what we're seeing a lot of times when we're underwriting, the deals that, and that's Matt's job, but when he brings it to the Deep Blue Capital Group, a lot of times what we see is operational, inefficiencies and what does your organizational structure look like all the way from, top down to your property management companies, and then how do you manage them all?
Yeah, so we manage 500 units out of the office here. So my team manages those, and those are usually the little in between. So Cleveland would be the only one that's a 29 unit, but anything else, like we have 48 units in Little Rock. We just have these little in between properties. You know, the office building over in Columbia, South Carolina, the storage units here. We manage those out of the office because we find that these little ancillary properties, you just can't find great property managers. You spend all the time managing a property manager where you could just cut them out and be more efficient with this, because those property managers, they can't have on site, and they're not usually really set up for the scale in a good way that meets our needs. The larger ones, you know, so in each market, so in Atlanta, in Baltimore, over there in Greenville, here in Nashville, we have one designated property manager that's there, like a regional one or someone who's very highly specific, that's, you know, that's meant for this. So the one here in town, they have 4,000 units they manage. You know, they're very, they've been, I think, in business since 1982. Full team, best in pricing, best in, you know, they get the best contract prices, the best in kind pricing across that, from, you know, full thing. So we get top notch management that I wouldn't be able to compete with here. So we'll use them on the higher properties. So we have, you know, I think maybe right about 1,000 units here in town, and they'll manage all those. When in fact, the smaller ones, we do a better job, because that wouldn't be their bread and butter, because they have a very customized process.
Love it. Love it. And if you don't mind, I want to get a little granular for a second. You know, what are you looking for, again, as we've kind of adapted to this higher rate market and inflation, and we've seen, you know, at least here in Texas and certain markets, we've actually seen some of the bad debt, you know, bad tenant debt increase. What are you looking for? What are your key metrics you guys are considering during your underwriting process for new acquisitions?
So right now, a lot of this has been coming down to basis, because right now, let's say Murfreesboro for sure. Murfreesboro, you know, all transaction volume has been, you know, anywhere between like 135,000 to 165,000 per unit. We're just going to look at that, right? So it's been highly aggressive. Things have been trading still into, you know, mid fours into low fives, right? We've been walking opportunities. We brought 125 unit months ago that was from a seller. It's been in his family since he built it back in the late 1970s. Their basis, I think we brought it at the basis of about $78,000 a unit. So we know walking into that, we can make choice improvements, because we had to go get a bank loan for that, because the rents today were $550 and $625 for 1 and 2 bedrooms. And the market is right at $1,025 and $1,250. So we're walking into this building doing $400 renewals on people and making improvements, but doing $400 renewals. And the tenants are staying because they see the improvements and they know they can't move anywhere else in town. So we're going to walk into this part and really just pick up in the bottom line from a cap perspective. Walking in, you know, the cap will be low. You know, we'll be into, you know, four cap into low 4 caps, but it's not a stabilized investment from our model. So we walk into that, we'll pick this up, and we'll be at a high 7s by the end of year 1, with where we'll pick up based on purchase. So you can walk into that based on opportunity. We just did the same thing on another property. It was 355 units, where it was, we were buying opportunity. The sellers had to sell because they have a lot of properties in a lot of markets. They have a development that was upside down. They need a very high amount of cash to go in there and just basically get to the new loan they need to for that development. This property they've had since 2012, very low basis on the property, you know, not much existing debt on the property. So they had the opportunity to go out there and sell this at a premium, but they didn't have time to go to market. So what they did is they went to some of the brokers and they said, who have you transacted with in the past? Who could close? And we have closed 6 times with the one broker, brought the opportunity to us. It's a very attractive price point, rents at a very good level. It's just not being run well, because with where they stood with the property, you know, they were managing it from 3 hours away. So we have, of course, a great team here who has all, you know, best in class with everything they do from just the pricing side to the marketing side. So we have all that built in. I know exactly how the properties operate compared to all the other properties in the area. And now we just know where this property should be and where it's missing out. So from an operation standpoint, 2 things. Market rents are wrong, right? Other income is not matching the market. Expense side, you know, just everything. Advertising's wrong. You know, repairs and maintenance, right? They're doing the wrong turns for what they need to actually get the right pricing for the models, and they had the wrong amount of staff. So we go in there and just do very easy corrections on the property and can step it into exactly how our other properties are operating.
Love it.
Yeah, I mean, that was just, you know, super cut and dry and very, very clear. So thanks for that, Jason. You mentioned that earlier on that or we talked about it before the show, actually, that you know, physical fitness, right, is really kind of a core tenet of who you are. And I can tell that you're a guy with a lot of energy. And how important is the right fitness routine, and having fitness goals like you do, and some very, very accomplished background. What is it that you do, number one, and how is that kind of crossed the lines into your real estate investing journey?
I just think like the words would always come like, this is what I do now. Like, so like I just get up every morning and I just work out. It's just something that starts my day and like kind of sets the starting line, and it gets me to a point to add a control level to how I start. So when things come up, right, things blow up, like whatever happens during the day, that's just going to happen unexpectedly. I'm not, groggy because I didn't get up, or I'm not, late because I didn't have time to get anything out of the way in the morning, and I can actually focus on what's ahead of me. So it really sets the pace for me. So from a fitness standpoint, I think everybody's have some exercise protocols. You have to work out every day? No, but you should have some consistency to that routine, because you're doing this for longevity, right? It's that simple point. Like if we're going to build massive wealth, we're going to do something to grow, and then all of a sudden we're going to die at 49 because we're smoking, eating McDonald's, and just and not doing a thing, and staying up to 3 a.m. watching Netflix, and like, what do we just do? Like, what was the purpose of all this? So I use this as something as me. It sets my base, right? It gives me just a line of like, okay, now I can start. And without that, it feels like the day starts in chaos.
Yeah, I agree with that. On very few days where I don't work out in the morning, you feel it all day long. But you don't just work out in the morning, dude, right? You run ultra marathons?
I've run ultra marathons. I run ultra marathon. I think I did 2 last year. I did a 50-miler. I do a 50-miler and a 50K. I usually just pick them a couple months out and just go for it. But I've done a couple 100 miles. I've done a lot of marathons. And, it just was one of the things I started as a consistency to it. I just started running. I started running probably 15 years ago because, I was playing sports in school, and you get out and all your friends are doing other things. And I have oddball hours right now. I'm working in bars, and it was like, okay, what am I going to do? Like, I'm not going to, like, no one around to like go play basketball, or like, like not like you're playing football. So like, what do I do? So I just started running, like, and I was never like, I'm still never like a runner. I just run. Like, it's just something I do that sets the format. And so I'll break that up. I'll run a couple days a week. I'll do CrossFit, and I do a lot of kettlebells. I think running and kettlebells, if it was like, okay, what do you need? Like, if you could literally do 2 things, like give me a kettlebell and I'll run. That's all I need to do.
Love that. So you don't just, so I've run a couple of half marathons, right? And I've done a bunch of Spartan races, which I truly love those things, but I can't imagine running a half marathon and then turning it around and doing it again, right? To come up to a full marathon. You're running ultras, which are 50 miles up. Talk to us about your mental, your self-talk, right? Your mental state to just keep going for 50 miles. What is it? 50 miles probably takes you what, 10 hours?
Yeah, it depends. Sometimes the elevation is pretty crazy, so it could take more. 12. I think I did one in Ithaca, like up in the mountains there, and that was maybe like 12, 13 hours. But and so the ultra is anything past the marathon distance. So like 26.2, anything past that is deemed an ultra. So if you're like a 30-mile, 50K, that's 31, or anything within that magnitude. So but like, I would ask you, like, if, at some point you're like, how do I do a half marathon? Because you were running a 5K, and then you got to the 5K, you're like, I'll do a 10K, and you get to the 10K, and you'll do a 13. But if you can do a 13, why can't you do a 26? It's basically just like, it's like 50 units to 100 units is how I think of it in my mind. Whereas like, the first part is like your body, and then the last half is your mind. So like if I run 100-mile race, like the first 50 miles, like, okay, my body's got through it, but then you get to the last 50 miles, and like maybe the sun's been up twice, or like or anything, that part. Now the temperature's all over, your body's all thrown out. Like, you don't want to eat because you just been like eating random things because you're burning 18,000 calories, and then your mind is like, okay, what do you want to do? You want to quit? Like, you ran 50 miles, like, or you want to just keep going? And like usually where it's like your body's fine, but your mind like is like gives you these parts. So it's like, and all it takes is 1 second. Like, you just ran, you've run 10 hours. Right. And now in 1 second you stop because your mind's like, oh, I'm good. Right. But your body's fine. But your mind wants to tell you, you're probably good. Maybe you don't want to push it. Right. But then you have those moments where you have to say, okay, well, let me just run to the tree. And then if I just run that tree and then I want to quit, let's just do that. And so I'll be like, okay, let me just run to the tree. I'm like, okay, I'll just keep going. Right. And then maybe it's another 500 feet. Right. And then I'll be like, okay, yeah, I'm good. Let's just keep going. Right. And I just give myself that next step to get to, and then I can reassess. Right. And lo and behold, through that, right, then you just get back in your rhythm. Right. And you're just running. And then maybe it gets bad again. You're like, okay, I got to run to the tunnel. Let's just run to the tunnel. Right. And you go, because what I found is that I do that and I get to the end of 100 miles, but it's basically on a set of like, small little achievements throughout, right? It's like us with the goal. It's like, I want to pick anything, like, buy my personal apartment, right? Building, right? That's like a big thing here, but like, that's the goal. But again, like when you do that, like you're taking a lot of little steps. Like the little steps is like all the time. Maybe you're spending 3, 4, 6, 12, 18 months to do that, to buy that apartment building. So you just have to keep moving, right? Just keep going forward. It's like, in the morning, some days I'm just like, my body's dead. I'm just like dead, right? And I was like, I just got to get up and get going. And once you get going, you're good. But it's like that point of like, literally can't move, to like, okay, I'm up, moving. Okay, just let's go. Pick up the kettlebell, right? Let's go, right? And then you get to do that, then you're going, right? It's like that's all it takes. But it's that point from not doing anything to starting something, right? Once you're starting, you're going, right? It's like an old truck. Like it's impossible to get things started. Once the thing gets started, that thing could run over, you'll run through a wall with the thing. But just getting started, going, right? And getting a little bit of momentum. That's anything and everything. So it's that little bit of momentum and just those pauses in between, just to not react to the 1 second choices, because those are just deadly.
Yeah. I remember that was awesome. Thank you. I remember on my second half, I don't know, I was 2 or 3 miles in, and my brain was like, dude, this sucks. Let's just give it up. But luckily I had some awesome techno on, and I was just like, you just gotta find ways to quiet the mind. And I think sometimes when you quiet the mind and just keep going, you can go a lot further than you thought. I think Tim Grover says in one of his books, crave the results so intensely that the work becomes irrelevant, right? And sometimes you just got to tell yourself to keep going. So I love that. How have you taken that same mindset and mental framework and applied it to your apartment investing or your real estate investing business?
Yeah, I mean, it's like the 100-mile mindset. It's just like really the same thing. Like, when you get to the goal of buying an apartment building, you're like, great, but like it's literally like that's just the tip of the iceberg, right? Then you have years of operating and running of it, right? So, we think about these goals. It's like, oh, I want to lose 30 pounds, or I want to make $1 million, or I want to, buy an apartment building. It's not like the world stops at that moment, right? You're like, that's just when things start. So now you look at this as the longevity play of it. Like now we have a process, and that process is going to be a number of years and to be consistent with our routines, because now we have a business plan to implement. We have investors that we need to make sure are in the know and meeting their expectations, right? So we have a lot of parts that need to be consistent. Now, like you guys own properties, is every day perfect? No, absolutely not. Like, oh, today, a sewer line, went down, or, who knows, HVAC went out, or, someone passed away in the property, like you fill in the blank, right? But it's just that point of like, okay, that's not the whole experience of the property. It's just one moment. And so we have to keep consistent to the action of the goal, because along there's going to be things like along a race. Like I might like trip over a root because I took my off it, and, or I might lose a toenail, or, or I might get dehydrated. Like that's not the race. That's just a moment in the race. I have to go and correct and then continue on.
Jason, tell me a little bit more, and I'm assuming that, you mentioned Jake and Gino in the past, and I'm assuming to run ultra marathons, you probably had either a program, or maybe I know a lot of people hire coaches during that time. Tell me a little bit more about your 7-figure multifamily mastermind, because, especially right now, there's, or let's lead up to 2019 to right before the interest rates went through the roof. You saw the multifamily gurus out there just pitching, how to get out of the rat race, how to, use this as retirement. And then all of a sudden we're seeing properties going to foreclosure, et cetera. So who you surround yourself, in making intentional is super important. Tell me more about your mastermind.
Yeah. So ideally we took strategic steps, right? We figured out what we wanted, figured out why we wanted it. We figured out, where it was going to be, figured out, why it was going to be there, figured out the team we needed around us, how to underwrite deals, how to raise capital, like just all the proponents of this. And we started to do the similar process, and people would just ask. And so we put together something that was just formative, that like, here's the steps you can take along the journey. Right. And then on the back end, what will help you, right? If there's some point here that you have an opportunity and you want to go over the opportunity, we'll give you all the risks, all the rewards, all the ideas, potentially why this work, or make sure your underwriting's in tune, or what you're missing, right? Because it's usually, like I said before, it's not the big things. It's usually the little things in between, one from a mental standpoint, right? To get over their hurdle of just understanding that you're facing speed bumps now. to get to where you want to be, but you're looking at them like, massive, massive hurdles, right? And then in between of just the logistics of actually doing it. So we just help people just achieve their goals by setting realistic expectations. The thing that usually comes up is that there's a mental capacity. And on the other side, there's just it's just being patient, right? It's like we're all in a rush to, look our best or be our best or feel our best. And then we immediately react to like, oh, I lost 20 pounds. So I guess I could just, go eat ice cream and not work out for 3 months and you go back. But like you're doing this, you're buying apartment communities, I would assume, because you want a course correction in your life and you want to be able to create something new of value for you and those around you. So, what's the rush? You need to be patient with this process to find good opportunities. And could it take 3 months? Yeah. But could it take 2 years? Absolutely. But if you're doing this and you're committed to it, it's going to happen. But it's also going to make a very big change and give you positive momentum once you find the right opportunity for you. So you just got to be patient to the work. You got to be persistent and consistent to doing the work, knowing what you want and just staying to the path, and then it will come.
What's been your niche on the folks that are in your mastermind?
We don't break out of our process because people will get very shiny object. We're not out there like flipping motels. We're not out there, doing mobile homes. We're just sticking to the core process of this is, if we want to make it as simplistic as possible, is that we buy apartment communities that are just not great places to live. And we go in there and make them better places to live, just to improve the curb appeal, just improve just the tenant experience, right? So that makes people happier. So people, because they're happier where they live, they like where they live, they assumingly will pay more rent, right? And so now they'll pay more rent, which creates more revenue for the property, which ultimately would create a bigger bottom line. From that bottom line, we'll hopefully achieve to create greater returns for our investors. So we help people understand what are the dynamics for the investment that really stand out that you can implement that are going to make sense to make this a good investment for you. So we just try to keep it very simple, garden style apartments. We're not doing high rises. We're not really teaching development. Even if we have a small part of this, we're just keeping a basic plan. This is the format. This is where we are, and making sure people really identify with the market. And that helps. And then the last thing is that we help them understand whether or not, they are good by themselves or if they are having holes, right? You have your underwriters and others in there, help them at least identify or align with a partner or partners that could add value in places that they're not strong in.
Amazing.
Jason, as we come up towards the end of time here, this is a selfish question because I'm kind of more in charge of this here at Deep Blue on the capital raising side of things. In 2017, you before you guys acquired your first complex, you already had $1 million basically committed, ready to go, lined up. And during the good days, which is weird to say, during the COVID days, which was kind of the good days of the real estate value run-ups, money was easy to get. How has that changed? And then, how have you adapted, and what do you do day to day from a capital raising or reaching out to new potential investors in your network?
Yeah, I mean, it's always an inverse, right? So you either 2020, 2021, there's a ton of money, but deals were hard to find. And now we're in a part, there's more opportunity in the market. It's around us, but money's hard because people, there's that scarcity or some part, or people are just not having the funds or not making the income, right? So it's always a push-pull. So I don't give much thought to it, minus the fact that we keep the same system, keep the same outreach, and just keep consistent with that, right? So with that, it just continues to give us runway. Now, for good opportunities, do we have to have more conversation to get more investors? Yes, because at this point, people don't have, there wasn't a ton of free money came out to the market. There wasn't so many jobs are being printed off. So many people that were just, all their investments were rising. So they felt more comfort. So even if people have the money to invest today, they're still making sure that they're good, right? Because it's been, we've had so many random black swan events, right? Some wars, to bridges collapses that people are scared, for due point, right? There's just things happening. Election season, don't know what's going to change, right? I see their friends get laid off. So right now, you need to understand with your investors, just give them the options. Like, here's why real estate could make a good part for your investment portfolio. I'm not saying invest all your money in this. You keep your investments where it stands, but you as an investor, you can see how the stock market is rising now, but then it crashes, goes up and down. You have very little predictability in that market and very little control. Even though interest rates are very high right now, and that's a direct effect on values. Typically over time, real estate, because of the asset, it holds value, right? It's going to consistently give you returns. And over the runway of 10 years, it's always outperformed on a running 10-year average, the stock market and the bond market. And why is that? Because they're not liquid investments. They hold value, they produce cash flow. And with that, that continues to give them appreciation in the right markets.
Putting that business finance degree to work right there.
Absolutely.
I love it. I love it. And what I'm hearing on that, Matt, you can attest that running, large sales teams is just putting in the work.
Yeah.
Right. You're not altering it. You had mentioned that in your mastermind is you don't go and chase the shiny objects, which a lot of people tend to do right now. And it's just, going back to the basics, talking to more people and it's a relationship game.
Mm-hmm.
And so, here with us, again, we started this in 2022, so we were in that build up ramp up phase, but we've all run successful sales organizations, and it's all the same thing when it comes to that. So,
yeah,
I love hearing that, and thank you for sharing that, Jason. And definitely
your starting line. Like the one thing, don't if you're out there right now, just get active. Like if you're going to be in this for a generation, you're going to face this again. Like you're not going to stop, right? It's like if you run sales teams, you get busy, get all these leads in, right? And you're like, oh, well, let me stop this market because I have 1 million leads, right? And then all of a sudden you crush the leads and you've stopped the marketing, and you have no more runway, and now you have this ramp up where you have to go ramp everything up again to get started again, right? So if you're in this committed, right now is the time to start. If you're listening to this today or you're listening from a year now, right now is this time to start.
Agreed. Yeah. And, another thing I continue to hear is, it's tough to raise capital right now. And absolutely. But the coach in me also says, or wants to ask that person, well, are you doing the same amount of activity today as you were 2 years ago? Right. Because number one, deal flow, at least in North Texas, I don't know if you saw Mark's post this morning, is down 75%. From 2022 to 2024. Well, if you're only looking at the same amount of deals, you're going to close proportionally less, right? If you're only talking to the same number of investors today as you were 2 years ago, between, folks just having a scarcity mindset or being extra conservative, of course, you're going to be attracting less money. Right now is the time to double down. And it's not easy to do, but you've got to find a way. How do you attract more investors? How do you talk to more investors? What are you doing for your deal flow? Are you increasing your strike zone? Are you doing things differently? Are you trying to find, create opportunities? Because I think that's really where the differentiators are going to be. The straight down the fairway deals that we might have been seeing 3 years ago are probably not coming right now. A lot of the opportunities that are crossing our plate have a little hair on them. They have deadlines. They have bridge debt maturing. They were purchased by an operator from 1,500 miles away. He's never seen the property, shows up one day and finds out that it's 60% vacant, right? There's some hair on the deals, and you've got to be creative, and you've got to be persistent, and you've got to have the chutzpah to really get in there, get your hands dirty, and turn these things around.
Agreed.
Absolutely. Well, Jason, we're coming up on time here, and we truly appreciate it. Where is it the best place people can find you? Because I know you have a podcast, you have the Mastermind, you've got your website. Where's the best place someone should go and start looking you up?
Yeah. So company-wise, go to yarusiholdings.com. You can find all about us, our team, what we do if you want to talk more. And then you can find me, Jason Yarusi, at Instagram.
Love it. Love it. And go listen to his podcast. It's called the Multifamily Live Podcast. I'm sure that you can find that on Spotify podcasts, or is it on YouTube as well?
It is on YouTube. Yeah. So that's me and my wife. And I have another podcast that's more on momentum called Live 100. You can find that. That's just short clips about just taking action in the day.
Awesome. Live 100. Well, Jason, thank you so much for joining us. And if you really enjoyed this episode, here's what I'm going to ask you to do. I want you to take some action. First and foremost, if you're watching this on YouTube or you came across this video, just hit that subscribe button so you can get notified for more videos and more episodes just like this. If you're listening to on any podcast channel, you can subscribe to it. You can hit the rating button, 5 stars only. If it's not, please make sure that you call out. It's probably Brian's fault who's not here today.
Definitely. It's always Brian's fault.
It's always Brian's fault. And then, just connect with our guests. I mean, they're taking time out of their day, which is, we're an honor that you joined us today, Jason, and to have someone on there. He definitely can outrun us. I can probably outlift him, but he's going to go longer. So
you said it.
Yeah. But then go to Deep Blue Capital, go to our website, deepbluere.com. Make sure to sign up for our investor newsletter. We have our ebook there. We've got the questions to ask an operator before you want to invest in a deal. I just walk through a new investor last night who went through that checklist with us, and he is committed to investing money with us as well.
And he flipped the questions on us, which I thought was really cool.
I loved it.
Yeah.
He did exactly what we asked them to do.
Yes.
So just go to deepbluere.com. And then if you want to be like Jason, you want to be like myself and Brian and Matt here, and you want to do a podcast and make some video content and put yourself out there, just go to torestudios.com, TORE studios.com, and connect with Jesse Showalter. He's got the best looking beard in the industry. Just go to torestudios.com and then join us on the next one. We're now just 46 deep. We got 3 more.
That's it. We're going to do the big 50.
That's right. So Jason, thank you again for joining us. Thank you guys for listening, and we'll see you on the next one.